You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Ray Capra and Dan Gibby.
Welcome, everyone. We're going to have a great session today. Everybody loves talking about candlesticks and price patterns because it's what we trade. But there's so many different names. My goodness, your head starts to swim around Harami's and dark cloud covers and piercing patterns and which ones are the best, which ones are the most reliable. How do we trade them in different time frames? It really starts to become a little bit of a brain damage situation, like most things that we do with technical analysis. Well, are we really going to talk about advanced candlesticks on top of the shooting stars and Harami's? Not really. But it's a more advanced way of interpretation. Something we coined many years ago is bar by bar analysis. We'll explain more about that. But in part, it's about recognizing that these candlesticks, which are pictures that represent to us what other people have done. And potentially, if we put it together with other concepts, what they are likely to do, that we can then form strategies for trading and investing. That's what it comes down to. So the advanced part is how we interpret the information with all the hype and hoopla about certain names, and we can get into that a bit, but let's do it, Dan.
Good afternoon. Yeah, that was an awesome distinction that you just made, because I guarantee many people, oh, advanced candlesticks, did you all find a special one that gives additional meaning? No, it's the meaning of exactly what you said in connection with all the other ones. So we have tons of examples, and I mentioned in the green room today, I said, you know what, every single chart we look at applies to today, because I don't care to look at anything, a 2-minute chart of the weekly anything, and we're going to be showing you how we interpret it. You can take the names off it. I don't even care what it is. We're going to interpret it the same. It could be a bag of rocks, a chart of, Beanie Babies, or people selling straw hats. Well, we start with this slide, obviously, because this is our technical approach. So, price is king. Price and candlestick analysis. I kind of read these together, and that is, all right, that's my starting point. I have a compelling setup. And then we say, all right, now where is this setup in the trend, support and resistance? We have these other concepts, relative strength, weakness, do multiple time frames. What do they suggest in terms of that setup on your time frame working? What are the broader markets doing? Are we fighting that, or do we have the tide at our back, so to speak? Market internals always give us a heads up of potential turning spots. We have different levels, whether we're swing trading or day trading. And obviously, money management, trader psychology, that's just integral to everything. Because if you don't have that, then you don't have the objective ability to systematically follow your trading plan, your approach. So Greg, why don't you talk to them about your candle language and,
Sure. So Japanese candlesticks, I don't know if anybody's studied any book on candlesticks, you heard about the Japanese rice traders and how they formulated these patterns, and what a nice story, and go on and on and on, right? And you can trade rice and you can trade this and that, right? But as I said already, it's really about these pictures telling us what occurred in the past and what's occurring right now. And if we put that information together in a systematic way, it'll guide us into our thought process as to what we believe is going to happen in the future. And so coming up with the name candle language. And the things that we speak about here in MT Live and in our courses and stuff are to build what I call that thought process. So as I look at individual candles and put it together, we'll talk about bar by bar. And as we put this information together, it comes down to, I don't care what you call it. I don't care what you're trading. It can be Forex, it could be Apple Computer, it can be S&P futures. It doesn't matter, because human beings are trading all of these things, and we all have emotions and beliefs, greed and fear. And so as I look at those candles and they begin to guide me toward, where am I going to make money? Candle language, they're talking to me. And at times they communicate to me, you know what? Hey, Greg, nobody knows what the hell's going on. So just, put on the handcuffs, push the mouse away, and, wait for things to clear up. And eventually the language will talk to us to tell us that, hey, the opinions about what was happening are changing. So you need to change. And so this language, this conversation that we're having with the markets and candlesticks are always ongoing. And what we'll share with you today is you'll see how this information actually will force you, if you allow it to, because we're all stubborn, right? Once we have an opinion as to, changing. But once you learn this information, it's really powerful, because it's hard to fight. As much as you will try to, not to give up your belief and your opinion, you're going to really have a conflict as to, what's going on if you don't succumb to what is. So,
yeah. And we could spend the entire hour just on this chart right here, talking about what is a candlestick, what the arrangement of them, what's a tradable pattern, what's the meaning of different arrangement of them here. But we're not going to do that. I'm just saying there's so much there. If you pull up any trading platform, they're going to have, over 100 things that you can look at, and different oscillators and things to put on your charts. And in the heading here, we say that these terms, they're meaningless without understanding the meaning of the bar in connection with everything else. So Dragonfly Doji could just be a consolidation in a bullish uptrend, or it could be a reversal depending on the overall pattern. So don't go ahead.
By what you're saying, Dan, and when you're saying, these platforms, is that, look, whether it's, I think TC2000, which we use for scanning, of course, will search for any of these and will then, tell you, hey, there's a hangman or a hammer, whatever. What do you do with that? So, whether you're, any of them, it comes up and, okay, here's this candlestick pattern that you learned about wherever. Well, without being able to put it together with the other concepts we're going to talk about, it's almost meaningless and very misleading. And so all of these names, why would I even want to try and remember them? But I bet you we all did it at the beginning, because we were led to think that this is the way, that you need to know all of these different names and their shapes and everything. And we're just going to show you a easier, better way.
All right. So here's just some candlesticks and some tails and some ranges. So let's talk about them. A candlestick, let's start with this little narrow green one here. It doesn't matter what time frame you're on. It's measuring the opening price, the closing price, and that then if it's above the open, the software colors it green. So we say,
want.
I'm sorry?
Or whatever you want.
Of course.
Yeah.
And so we're saying that the bulls won that bar because It opened here and demand was greater than supply, and then it moved higher. So that's just a fact. It's not a tradable event. Now this one, identical, well, and just for definitions, and then the high of the day or the bar and the low of the bar will have these wicks, and that makes up the entire candlestick, the open close, high and low. And so this one's the same as this, the bar open here, closed up here, but it's a wide range bar. So it is much more powerful than this one. And we look for these out of consolidation as potential igniting type moves. Once again, overlaying our other concepts. You don't just do a scan for WRBs, as Greg said on the last screen, and hey, I'm going to buy WRBs. It might be the end of the move. Okay, so now this one. This one could have looked like this at the bar's high, because it opened right here, and let's say it went up here and it looked like that, just hypothetically. But the bar's not done yet. And then the sellers took control and slammed it all the way, not only back to the opening price, but below the opening price, closed here, software paints it in red. And this is now a visual display, big range expansion. That's a powerful rejection bar. It could be a reversal bar, depending where the rest of the pattern is. It could be an igniting bar down, but we're just starting slow here and helping you interpret the meaning of these bars. It's exactly what I'm telling you, but that's not a tradable event. We're going to spend the rest of the time looking at these in real charts.
You might be wondering, what am I doing here? I'm just drawing stuff here, but Dan used the term range expansion bar. Over here, we use the term wide range bar. And a question that often comes up is, well, how big is that? Well, you just look at the chart, and a wide range bar on Amazon is going to be different than a wide range bar on Intel. So it's a visual that you see, and it's up, if you're looking at this chart, right, say here and here, and you see a couple of candlesticks next to each other, well, relative to maybe the ones that were over here, you say, well, that's a big one. That's a range expansion bar. And this one here, the range contracted. That's just a piece of information. Nothing you can do with it, but as we put this all together, you'll understand how to use it. And it can be a very powerful information.
So this is a great slide, Greg. I pulled it right out of his course because it's timeless and it's valuable as can be. So in this, in the sense, is the current market environment. So this slide is very timely, particularly if we're looking for a retracement and want to start shorting things or selling bear call credit spreads, which means, hey, I'm going to sell a call above resistance, and I'm going to take that money and hope the issue retraces, and then I keep that money. And so we spend a lot of time in the green room reviewing things like this. So something's extended far from the 20. Got it. That doesn't mean fade it. We use the term, and I highlighted it here, potency. You don't just jump in front of a moving train. We want, using simple candle language, we want some indication of an exhaustion of the demand. And then profit taking starts coming in. So Greg made this slide just to show these are different scenarios, okay? 1, 2, 3, 4, 5. He just drew 5 different scenarios. And this one, why we say it's less potent. Why is it less potent? Well, because it opened here, you know, it went down a little, but it does nothing relative to the strength of this move. What about this one? Well, it's a little more potent because it gapped up and got slammed at the open with a wider bar than the prior example. This one. gap down, topping tail, came back down, closed under that low. It's a 2-bar reversal. Why is this one more potent? Because they're both wider bars, and we call that a 180 reversal. So there's more shock element to the end of the bull run in the start of, I don't think so, you're not going any higher. The bears took more prominent control that it's not going higher. This one now, it's a little similar, but it's what we call a 3-bar reversal as opposed to a 2-bar. And you might say, well, okay, Dan, what about a 10-bar reversal? Absolutely. You know, we did a bear call credit spread on one yesterday, LRCX, where it gapped below like 15 bars like this. And we sold a call spread over the high. All right. So unless you want to add something, Greg, we'll.
You know, the only thing I would add to that is, you know, we're talking that these are representations of what people think and what they communicate to us. So this slide says, okay, this is the least potent and that's the most potent. And Dan explained, you know, you're getting more bars and the bars are getting bigger. But imagine that you're in this trade, you know, that's going up as that was, and let's get this other, you know, as it's going up, and it goes up like this, and it comes all the way back down again. It's like, hey, that thing rallied up. It was looking great. So how do you feel here? And how do you feel here? Has that gotten you a little concerned that sellers took control? And well, if it runs up, kind of like what the market did here, and it goes sideways, well, we could talk about, we'll look at some charts. What does that mean? And then it goes all the way back down, which is this picture. Think about how you felt. Was it looking great? It's going sideways. It won't pull back. It looks like it's going to go higher. And then all of a sudden it's like, what the hell happened? And so as opposed to it's going up and it's controlled and a little narrow bar. But if this bar was followed by, you know, a giant wide range red bar, well, you don't have to be a genius to know something went wrong.
All right, let's start looking at charts. This is one that's actually, I gave you the symbol here because it's on our watch list right now, over the high of this green bar. And I just said, wow, look at so much is going on here. Now, so I put arrows at many different spots. We're not going to take the time to go over them, but just kind of look at them, because everywhere I have an arrow is visually giving us information, which is today's subject, right? So there's a difference between understanding candle language and a tradable event. Okay, so yeah, great. Make a couple comments and yeah.
You know, this one here, you know, was a breakout, a little minor breakout that retested a prior failure, and it came back in, and that's a wide range bar. So even though you look at that and say, hey, you know, like I showed you before, sideways and then back down again, something went wrong. If you bought that breakout, something went wrong. And so this one here, this arrow is a little more controlled, but I guess you can call that a bear flag.
Absolutely.
Flare pole, that's your flag waving, and then a break. And then, you know, here's a congestion area. And now this is a range expansion, bearish 180 at an area of resistance. So if we took any of these, we took that candle or this one or these two without the explanation of what I just said, what would you do with that? Nothing.
Right.
Nothing. They're meaningless. But we see, you know, it's going down and where resistance is and so on. And now we start to find trading opportunities. And Dan's got an arrow here. Well, what happened there? Well, it broke down and it flipped right back up again. So
Yeah,
it looks different, but you
yeah,
know,
yeah.
yeah, somebody got caught selling the breakdown there. And look, we're talking about here, and we haven't used the term from that other slides is retracements. So retracements is a whole nother conversation, but if you understand that, well, who cares, about the names? It was going down and it flipped right back up again. It was a deep retracement. This is a deep retracement. This in another is a smaller way is a deep retracement. So as we talk about candlesticks and numerous candlesticks and what the trend is, maybe what the trend is in multiple time frames and so on, and support and resistance, it starts to become what we call MTS, Master Trader Technical Strategies. It becomes powerful because now you have a trading method. Look at that big bar.
And the reason it's on our watch list now for a long is this. Well, it's a big bottoming pattern. Okay. The blue is 20, green is 50, and red is 200. So this took out prior resistance. It's now just been consolidating 3-4 weeks, whatever the case. This red bar suggested lower prices. And now I have a big old engulfing closing breakout bar. Now I have an inside bar. And this concept, we'll see it in different charts, called a price void. It means look to the left, and I think it can move higher. So this trade right here, the setup, is a 1, 2, 3, which is this. So this is another typical slide of ours. We've been saying up until now, hey, we're just talking about the meaning of these candles, and these now are pictures of tradable setups. That on our first slide we said, okay, we start with a setup and then overlay the other concepts. Okay, so this is a 1, 2, 3 here, but we're putting this 1, 2, 3 now in the context of the last 2.5 months. All right, we got as much time as we have. As always, we have so many more examples that we could show. We'll just plow, and we always like to save time to look at real charts together and scan and answer questions. So this one, I have 2 charts here. So let's see. What did we just talk about, Greg? Candlesticks. What is the meaning of these 2 candlesticks in connection with this overall pattern now?
Well, I mean, I wish we had 2 hours, but ask questions and have that interaction, but don't be afraid to say, but just think about what that candle meant at the time. And maybe this helps to drive home our point here, is that if I do this, and now you cannot see anything, what were you thinking when you saw that giant red candle? I think we all have to think the same thing. It gapped up and sellers slammed it back down, and it closed near the low. And I mean, I don't know how you think anything else other than, it's going to go down. Now it's at this support, but that's a range expansion, big, nasty, wide range bearish bar. And then there's nothing to do. It's one bar. There's nothing to do other than your thought is it's going to go lower. Now, how do I interpret that? Well, it could be a bearish 1, 2, 3 that sets up, that drives it lower. But that didn't happen. So you can see how this bar by bar analysis concept that I'm talking about, that it went down, and however you want to call it, I mean, it's a retracement where it went all the way back up again and there were range expansion bars. That creates a belief. The first belief is that they ain't going down. So forget that thought. Right? So now I believe it's going to go up. Well, can I trade it? Well, I can. Of course, you need a money management and position management strategy, but at a bare minimum, you got to have a stop down below here because it shouldn't go back down there. But the other patterns could set up. Now, what Dan was referring to before, the 1, 2, 3, that's a big giant bar, and this is a nice little consolidation. And that sets up a continuation. So, as we look at these different examples and see what is this doing, this, well, if we start from here and I say, okay, that went down. Well, it went all the way back up again. There's another big retracement. So that's bullish. And now I need a pattern. And here's a nice little tight little consolidation there.
Right. And that's the one that this represents. This is a closed trade in our members area. If it's a new trade or open trade, I'll show you when I get to one, but it's a Telegram alert. This is a closed one. All of our trades give you the date, the symbol, stock or option trade, technical setup, and management all the way to conclusion. So we did trade this both directional and we sell options and buy options. And this was a no-brainer trade where we sold out of the money puts saying, I don't think it's going down. And so both of those were very profitable, but this one, we were only in it 2 days. We bought this breakout 2 days later, we made 16% return. I said, look, I don't feel like sitting through a pullback because, sometimes I'm guilty of that. You have such a huge gain and we just take it.
So let me answer a couple of, how far is too far from a moving average? Again, that's a visual thing, but how far is too far from a moving average has different meanings. And you say, well, what does that mean, Greg? Well, this was the beginning of the move. It was powerful. It's supposed to get far from the moving average. The meaning is in the moment, it's a bit far, but it suggests it's going to go higher. Whereas if something has been going up for a while, kind of like coin, right, or block, they're moving up and it's had several advances and gets far from a moving average. Well, could it go higher? Yeah, but it's so far that you shouldn't be entering here either, unless you had a big stop, which would be okay, as long as the money management is right. But at some point, after an advance is going on for a while, getting far from a moving average suggests it's near the end of a move.
All right, same chart daily. I'm going to show you page 2 now, just because of the concept of multiple time frame alignment. So where we entered on the daily chart is right where I'm pointing right here at this breakout in this square is what Greg was describing as this big overall consolidation after breakout. So check the weekly. The weekly is a bullish consolidation, red bar ignored. The concept of price void means, look, if I'm buying where this arrow is, I'm through this resistance. I'm not through that one yet, but my target is, up here, the top of these tails somewhere. So that the weekly, I'm not trading the weekly, I'm trading the daily, but the weekly confirms the bias of the daily trade. And I'm not trading the monthly, but a daily, weekly, monthly chart that looked like this, we would have as a potential longer term trade because the monthly has a price void too.
I'm drawing again, Dan, to show,
Sure.
well, this is far from the 20, coming closer to some support. And now there's this rounding bottom. And notice the price action, the wide range bullish reversal that broke down, and now it begins to stabilize. So you can call this kind of like a head and shoulders bottom. Call it whatever you want. It's bottoming out. Look at this wide range bar. Now, just to mention, that question about how far from a moving average. You know, one of the things that makes trading difficult is human nature. We all want everything to be black and white. And everything in trading isn't black and white. And so while we talk about advanced candlesticks, which you now understand where we're coming from like that, there are advanced concepts, which in reality, the only thing advanced about an individual concept is how you put it together with other concepts, which makes a method. Where you start hearing about these systems, you don't even know what the system is doing behind the scenes or if it's valid. So as you're hearing here, we're talking about trends, support, resistance, wide range reversal bars, bottoming patterns. This is advanced. So you have to learn to systematically interpret all of this information, which comes after a short amount of time of studying, and you start to get it. And you recognize, call it whatever. I don't know, call this whatever. Head and shoulders bottom, shakeout, Fran pie bottom. You know, they have all these fancy names. Suggests it's bottoming and it's likely to go up.
Yeah, look, we were talking, remember that slide about tails? This red bar suggested lower prices. Now I have 3 bottoming tails. Remember we talked about it? At the low of the bar, the bears won. And then they all close with tails, which means demand, which means the sellers could not drive it down further. So that, I mean, some mechanical people don't even believe in charts. And that's just a ridiculous concept. I mean, we've been doing this 30 years and we have over 85% batting average, but these tails are real. It's not going down in the short term under this. And we wait then for our pattern to trade this breakout right there. All right, good stuff. I mean, look how clean this is. A weekly chart. I don't even know what it is, but tell him, Greg, or or you're typing. All right, so let's just think about what little we've talked about a lot today. This is in a downtrend, which we define as lower pivot highs, lower pivot lows. The computer spits out these dots for us, which is a pivot high is 3 lower highs to the left, 3 lower ones to the right. Pivot low, 3 to the left and right. This red bar closing breakdown in a downtrend under the bar's low 100% suggested lower prices and would have been a good trade, particularly if I could see more to the left to, make sure there's no support over here. And that was following this little attempted breakout, which failed. So that 100% looked lower. Here's my 180 reversal. This one tried to break out. It never traded over it. Now I, just sit back, see what it does. I don't know. And here's some type of retest. Now the thing blasted. This is one of our concepts on the first slide, which is retracement. So this is 100% retracement from a bottoming pattern. Take it from there.
This is, not the same as, it's not the same. It's similar. How did I say it, Dan? It's not that it's different, but the same.
No, it's same, but different. Same,
yeah. So look at this and visualize. Remember, I can't go back to that slide, but this was a power move up in a higher time frame. That's a wide range bar. It's a power move. So it gets a little extended from the 20, but that kind of power, multiple bars moving in one direction where the opens and the closes are, it's like one fluid movement. It broke up because one day ended and the next one started and so on. And it would be the same if you were looking at a 5-minute chart where you had multiple bars moving up like that. The interpretation would be the same if I saw this overall pattern on a 5-minute time frame. I'd be thinking bottoming long. Now I might look at a higher time frame to see if that's in alignment, like you would any, like this one on a weekly. Is it at support on the weekly? But it had a power move into resistance. I looked to the left. It's going to stall there. But because of the power move, the pullback should be buyable.
Right.
Okay, I got that. How do I buy it, Greg? How do I know the pullback is done?
Perfect.
Bullish 180 reversal, and it's a range expansion bar. You just learned more here than probably in most of the paid seminars that are out there on the internet.
I agree. I agree.
Without the fancy BS names and hype or proprietary indicators.
So 100%, that's my go. 180 reversal, you buy over the high, stop under the low. This is first target. We are actually expecting a new high based on everything we've just talked about. And then retracements buyable again. And we're not talking about advanced management today, but then we would sell half our position when it stalls at this prior high. We would hold half and let it pivot until it gets, as Greg says, to its destination. Here, somewhere over here is its destination. I guess eyeball things. Let's call it $67, $8, whatever. We'll just manage it in between.
I'm typing to Earl there. He says, so then the name does not matter at all. I was like, exactly. I said, if I call the pattern a wild dog, you would just still recognize it as a wild dog. That reversal says it's going to go up in the context of a bottoming pattern. So the names don't mean anything. What you need to understand is the picture.
Well, and just to add to that, though, Greg, we do use limited names, and it's just to speed communication with our subscribers. Like Greg says, a 180. I know what that means. It's not a tradable event per se, but it means it's a big red bar followed by a big green bar. We've showed you a couple of those.
Okay. And then a student would say, okay, is the 180 a breakdown failure? Is it a pullback 180? And so on. So a student would automatically know 180, just like you do now. 180 only means it went down and it went up. Now, is it a range expansion 180? Or is it a narrow range bar 180? Was it a breakdown failure? Was it a pullback reversal? And where's support? Where's resistance? What happened prior to the 180? And all of those thoughts come together in a tradables event.
Yeah. I'm not going to read these because I'll show you some examples, but we call shock patterns in today's subject, right? Reading candlesticks and so forth. Now, a shock it's like, wow, that the chart leading up to that did not suggest what happened. And so we love trading these as new opportunity, of course, all the other concepts. But, sometimes we're going to get stuck in one. And that's just a fact of life if you're swing trading and with markets closed overnight. So here's an example. Multi-month trading range. Ugly red bar. Still in a trading range. Nothing to do. Now it gaps over this red bar. And then look to the left. There's no resistance. So that's our price void. Notice that there's no bottoming tail. So what that means is, and that was a big gap, eyeballing this, $131 to $137. That was a big gap, and it didn't retrace. So we would have had this stock in our green room on our gap trade list over a 5-minute high. Here, I'm in a downtrend here, below all the moving averages. Here's a big range expansion bar, right? It gapped up, bottoming tail. Look at the size of this range. Range again, high to low. Look at the size of this bar relative to any other bar on this chart. And that's what we were saying earlier when we talk about big bars, little bars. It's always relative to the chart you're looking at. So now, do I buy over the high of this bar? Absolutely not. There's no setup. There's no price void. The risk to reward is horrible, but we put it on our watch list. Next bar went up to resistance, fine. Next red bar suggested lower prices. I'm not shorting it because, not on a daily chart, because, we wouldn't be shorting into this power bar. Here's my 180. Big red bar followed by big bullish green bar at resistance after 100% recovery with little to no resistance to the left.
And that recovery was an explosive giant bar. That's power. So how do you recognize power? It could be multiple bars moving up where the opens and closes, where it closes and it opens up again and it follows through. Sometimes it's just one big wide range bar. It depends on the time frame we're looking at. So this is a daily chart. If we were to look at this bar on an intraday time frame, we would see a monstrous move. And then the red bar would be a pullback. And the 180, we have a concept in the course called the transition from red to green, where we talk about multiple time frames and how to utilize multiple time frames and buy between the bars if you're using multiple time frames. So that's more of an what's really advanced about that? It's understanding power moves. It's understanding what that power move means. And then, well, if it's a red bar, should I be scared to death of a red bar? Well, not if you understand what preceded it. And then it should transition. So if I want to trade a smaller time frame down here, which we would just come back to looking at something like this. And this would be the transition.
Yep.
I got ahead of us there.
And folks, just Greg's course. I mean, here's some comments about our green room as I say the following. We've been doing these MT lives 5.5 years now. So every one we pick a particular subject, but we're always overlaying the other concepts. And Greg's course does exactly that. So, obviously you're not going to follow everything we're talking about, but his course, the way it's laid out, these thought building modules, teaches you exactly how to put all these pieces together to allow you to objectively interpret patterns the exact same way we're doing. We're kind of running out of time here, so I'll just kind of highlight a couple of things here. So this red bar totally suggested lower prices, not so fast. It negated it, but now I need an entry. Well, my entry is where the arrow is, which is a buy setup. 15-minute chart, identical concepts. Big old bottoming pattern here. Remember on our slide of 9 pictures, I have a wide range closing breakout. I have an inside bar in the upper third. I have insignificant resistance. In this one, we bought call options. I love buying calls and puts as directional trades when they are liquid. These are all recent trades. Look at this, using call options, just went into trail mode, made 109% on that. Here's a breakout above the 20 and the 50, and here's my buy setup that was also on the chart of 9 pictures, called a buy setup. It's right there. Once you understand what you're looking for, that's what our scanning does, is look for these pictures, and then the experience is looking for the quality ones, managing them, etc. This one, 4 days, 471%. I mean, dollars. Here's a sell setup, the opposite of a buy setup. We bought puts on this, 71% return.
Converging moving averages. That was a nice setup.
Yeah.
Yeah.
You know, this thing, this dog meat gap down, couldn't bounce at all. Tried. So here's where we got our, and here I might have actually had it as a dead cat bounce. The next day it's negated. This green bar is negated, and the next bar is a closing low. Now I'm ready to go. We bought puts on this one because it's liquid. Held it 9 days, just drifting lower, 38% return on that put. This is an open position, so I put this in here. So Greg, it's your pick. Daily, well, so say a word or two about today's subject of why you picked that.
Well, multiple reasons. And one of the reasons I picked it because you and I were going back and forth and you brought up buying a different healthcare ETF. And this one, had the big move down and right back up again. And, I saw that in the wide range bar and I was like, well, this one's got room to move up because it's a counter trend trade. And so, I thought, okay, this was a better setup, better risk reward.
Correct.
Yeah.
And so the weekly here, this is not a tradable pattern, but we look at it to see if the bias confirms the daily. And the reason the bias confirms it is what we've talked about many times. This ugly, ugly red bar suggested lower prices, 100% negated that ugly red bar in the concept of the price void. Look here to the look as this goes up, there's insignificant resistance. So those are the reasons. And this is our ETF trader where we only trade ETFs. We're still in block. We're still in block. We're still in XHB, are two of the stellar winners. But Greg, let's tell them about the special and then switch over.
What I just pointed out there was a downside shakeout pattern.
Yeah.
But you see, we're repeating things, but the pictures are different, but they mean the same. It went down and it went up, right? Multiple down, it went up, and then it went sideways at resistance. Mm-hmm. So it doesn't matter whether we're trading an ETF or a stock or whatever, we can apply these same concepts. And a wide range bar, it comes together so that, look, we teach you how to interpret things. I don't care if you trade Forex or whatever. It's all going to be the same stuff. And if you want to do intraday, you just change the time frames, the lower time frames. So if I got all the swing course, but a couple of options course, I want to take advantage of your special, but I don't know how to put them together. I'm not sure what that means, Kim, how to put them together. I mean, if you want a combination of courses to put together, you just pick them on there, over there, or if you want some combination of things, we could do that. But just email me and Dan and let us know what you want and we'll make it happen. All right.
Yeah, so Greg posted the link here. This 2024 specials, it's just an abbreviated way to get to the same place. So yeah, we have our best stock and option courses, a year to the green trading room, which is just a phenomenal place. We have people spend all day there. We have people come in for 30 minutes a day, whether the morning or the afternoon. It's a fantastic place to watch what we do in real time. Scanning, answering questions. Greg and I used to do private consulting, coaching. We charge $500 or more an hour, and we stopped doing it. And I just tell people, come to the green room. You have our attention all day to answer questions in real time.
Yeah, we got a hell of a pay cut, man, because they could buy the green room now for $500 for the year.
I know, but
anyway.
there's a special, well, go to the website on the green room. We have a $7 no-brainer trial. And this is the year-end special, where it's dirt cheap for a year. All right, let's look at the markets, answer any questions. Talk about candle language and anything you want to look at.
Yeah. So is the spider. Someone on the social media asked me if this was a 180 reversal. And that's a red bar. The day isn't over yet. You know, it's only almost 1 o'clock. So this could be a bottoming tail bar. So one of the traps that are there is that assuming a bar is going to look like it is before it's done. And it's the same thing if a 5-minute chart had 3 minutes left to go and you press the button and it doesn't look like that at the end of the time. So if this is a red bar, and what does that mean to us right now? Well, really not a heck of a lot, because this is just in a trading range. Things have been kind of like dead in the water since, you know, the Thanksgiving holiday. And so if it breaks below the range, it went sideways. And if it breaks below the range, that suggests it's going to pull back, you know, maybe into this gap fill area right here. We'll see. But if this turns into a bottoming tail bar at the end of today, I'm going to be thinking buy. Now, do I think it's going to go a lot higher? I don't know. I mean, it could be considerable. It isn't going to go out as much as it did here, but, you know, bar by bar. So here was a breakout failure. Now, it didn't fail completely, but it broke out to a new high and it came back in again. So at that point, I'd be thinking, oh, it's going to break down under these lows, but it hasn't done that. So we're just waiting at this point. What someone said. So this, you know, short term could be an entry point, you know, where prices continue up toward the old highs over here. It could be a blow off. You know, we'll see. You know, and then you get into the holidays. Qs showing relative weakness. You know, this broke down and now it's up, and little consolidation day today. So, you know, similarly, we've just got so far a wider trading range as this is flipping back and forth. You know, Apple gapped up and moved higher yesterday. And so there's a wide range bar and a nice little consolidation, but it's right up into resistance here. I'm not sure this can go much higher, but I wouldn't bet against it. But it doesn't have what we call a void anymore. It's reached its destination, but maybe it can go a little bit more, you know, especially with this kind of a pattern. You don't see my Apple chart?
Yeah, you're still in spiders.
Oh, maybe it's turning slow because I got so many things open. Oh, that didn't change to the Qs. What the hell's going on? You see it now?
Now I do, yep.
Okay.
Daily, yep.
Yeah. Okay, cool. All right, so you can see the 1, 2, 3. But as Dan and I have been saying, just to know a candle pattern, whether it's a 180 or a 1, 2, 3, you have to know the other concepts. Look to the left. Is it near resistance? Versus if there was nothing here, I'd have a greater or stronger belief that 1, 2, 3 could result in a more significant move higher versus there being at supply. SMHs, did the chart change, Dan?
Yes.
Okay. So this, you know, is relative weakness is kind of sloppy. We got a lot of red bars today in different markets and stocks. You know, this one is pulling back for a while into support. There's nothing to do yet. I don't even have any moving averages on here, but this would have gotten far from the 20 And notice how it broke out and came right back in again. So the idea
We did it.
of,
So Greg, sorry to interrupt. That's a good example of the slide we talked about with increasing potency. So we did a call spread on that.
yeah.
Under
It went sideways and it broke down, and I'm drawing here. It went up and it came back down, but the fact that it broke out and came right back in again, that wasn't a good sign, of course. And so, although this went down, we wouldn't have recommended this as a short, as a swing, because it was still strong. But for a call spread, that looked good. And Tim's asking me about RIVN. Yeah, this was in focus today in the green room. I had an alert and I told everybody, this thing's starting to move. I think you did a put spread on this, right, Dan?
Yeah, the 17-15 put spread.
Yeah. So now it's cleared these pivots. The day is not done. Can you imagine if it looked like a topping tail at the end of the day? I mean, right now it looks fantastic. I don't think it's going to look like that, because this is a perfect example of relative strength. This is a wide range green bar, still near the high of the day, where we could look at many things and they're red bars. That's just one bar, but today this is showing relative strength. But if we now start comparing this to the broader markets, we'd say, well, that showed relative weakness. Yes, it did. No doubt of that. But now we've got a red bar ignored. We've got this deeper retracement. And we've got a 180 type reversal and now a wide range bar. So this is bottoming. And as we look at that, well, we will look at how many slides we looked at where we showed you rounding kind of bottoms and talked about, breakdowns and deep retracements and retests. So as you put together, and there are other concepts that we haven't covered today, like pivots and creating support and resistance. And as you put this all together, it formulates a method of interpreting what's happening. And then what do I think is likely to happen? Well, since this is bottoming, if it starts moving up, which it probably should, maybe it's going to form a 1, 2, 3.
That'd be great.
Yeah, that'd be great. And so now it'll probably stall here, but because of this bottom, I would have a belief that it could go higher. So trading methods are based on beliefs, not facts. The past is a fact. The future is a belief. And so now I have a belief that while it would stall here, it should be able to keep going. How it reacts to that and what it does there is the unknown. And that's what gets everybody jittery and crazy. But what's it going to do? Tell me for sure. I was like, well, I can sell you the proprietary indicators for $1,100. They're on sale now. It's like, come on. That's the stuff that's out there. And how does TC 2000 determine pivots? It's a formula that's in there. And when you join BC, look, I'm just showing you a little part of TC 2000 here on this page, but look, there is this watch list for a top-down approach of scanning the broader markets, sectors. These are the S&P 500 sectors. And as we click this, right, any of these sectors, it throws the stocks that are in that sector in this watch list. This is something I created. I didn't create the idea of TC 2000. I created this page and created different reversal patterns where this will look for reversals. So there's no bearish 180s there. But if I look at the spiders and throw that in here, here's some bearish 180s. It's a short. That's a weekly time frame. Right? Breaking down. And so there are scans within layout or watch lists here, 1, 2, 3s, topping tail, bottoming tails that broke the prior day's low and reversed up, or this one, which has a whole lot of different scans. So when you join the green room, when you take any course, subscribe to a letter, if you have this platform, happy to share this with you for free. Well, not for free. You got to become a member of Master Trader, which is the value of this. These scans and layouts are probably thousands of dollars. So will I teach you how to use TC2000? No. I mean, if you're in the green room and you ask me questions or Dan questions, we're happy to show you, but we don't have a course on using TC2000.
But
If
Greg,
you
you do have one good video you made where you're
Yeah.
walking them through the whole top-down analysis, but that's teaching you how to find opportunity with it, not
Right.
the nuts and bolts. How do I, set up this minder?
TC2000 has their lots of different videos. They're kind of focused on indicators, and which we don't do, but what I'm showing you here is you'll get these layouts, and you know that if you click this, it loads a little breakout there. It loads the chart for you. And the other one I showed you, you click that sector and it loads the stocks in there. And now the whole idea is to find wide range bars. So there's scans in here. These are scans. 1, 2, 3s. These are scans looking for a 1, 2, 3, but this one's in a downtrend. It's not a bullish 1, 2, 3, bullish 180. And you just click it. I don't know why that come up as a 180, but well, I guess it kind of. But anyway, it's a nice little RIVN. We just spoke about that. Range expansion 180s. So once you learn our method and the bar by bar analysis, and you look at this and you say, oh, bottoming tail bar, you know that, hey, that's a bottoming tail bar. Is there a tradable void? Is it a support? Is it in an uptrend or is it in a downtrend? What am I going to do with that bottoming tail bar? So that's what you learn how to do and how to do it. And again, if you have questions on any of the courses or whatever, email Dan and I, Greg at Master Trader and Dan at Master Trader. And I hope you join us, especially in the green room. We'll be back next week.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.